What if you could buy just a few stocks today, and in 20, 30, or even 50 years from now, those same stocks could be paying you a passive income every month, growing your wealth exponentially, and providing long-term stability? Sounds too good to be true, right? Well, with the right stocks, this is not only possible but also happening today. In this video, I'm going to reveal 5 stocks that are perfect for buy and hold investors, companies that can stand the test of time and provide consistent returns for years to come. These stocks aren't just short-term plays. They represent companies with proven track records, stable revenue streams, and growth potential that can continue for decades. Whether you're just starting or you've been investing for a while, these stocks are designed to help you build wealth for the long haul. And don't worry, I'll be breaking down the numbers so you can see how these stocks can grow your money over time. Number 1. Apple. Apple has revolutionized the tech industry, and its ecosystem of devices and services is still expanding. With over 1.5 billion active devices globally, Apple continues to innovate, and its growing services division, iCloud, Apple Music, Apple TV Plus, and more, is adding high-margin revenue that strengthens its financial position. Let's take $10,000 invested in Apple at today's stock price and assume a 10% average annual return. Over 20 years, that $10,000 could grow to $67,000, and that's without factoring in the dividends. Currently, Apple offers a 0.5% dividend yield, so assuming you reinvest those dividends, you could easily see an extra $300 to $400 in yearly dividends, compounding that return each year. Beyond just stock price growth, Apple's strong cash flow, continuous product updates, and customer loyalty make it a valuable, low-risk, long-term investment. Warren Buffett, one of the greatest investors of all time, has long backed Apple, making it a core part of his Berkshire Hathaway portfolio. Buffett's strategy aligns perfectly with Apple's long-term investment potential. Number 2. Microsoft. Microsoft is a global leader in enterprise software, cloud computing, and AI, with its Azure platform experiencing explosive growth. Microsoft's broad diversification across multiple industries, including software, Windows, Office, hardware, Surface, and cloud services, helps mitigate risk and ensure revenue stability. Consider a $10,000 investment in Microsoft at today's price, assuming a 12% annual return. Over 20 years, this could grow to over $96,000. With a dividend yield of 0.9%, you would also see yearly dividends of around $90, which add to the growth over time. Microsoft's ability to adapt to the cloud-first world while maintaining its leadership position in software makes it an attractive stock for those interested in long-term growth. Additionally, Microsoft's strong history of dividend increases, it's been growing its dividend for 18 consecutive years, and its position as a dominant player in the software space make it a rock-solid pick for long-term investors looking for both capital appreciation and reliable dividends. Number 3. Berkshire Hathaway. Berkshire Hathaway, Warren Buffett's conglomerate, is a unique stock that represents a collection of solid businesses, including insurance, Geico, energy, Berkshire Hathaway Energy, and manufacturing, Precision Castparts. Buffett's philosophy of holding businesses for the long term, regardless of market fluctuations, makes Berkshire Hathaway a perfect forever stock. Imagine putting $10,000 into Berkshire Hathaway stock with an average annual return of around 10%, similar to its long-term track record. In 20 years, that would grow to over $67,000. While Berkshire Hathaway doesn't pay a dividend, its capital appreciation potential has made up for that. The combination of capital gains and Buffett's value investing principles makes this a stock worth holding forever. Number 4. Johnson & Johnson. As a leader in the healthcare sector, Johnson & Johnson is diversified across pharmaceuticals, medical devices, and consumer health products, such as baby care and over-the-counter products. The company's reputation for quality products and its ability to grow through acquisitions and innovation make it a solid long-term investment. With a $10,000 investment in Johnson & Johnson at a 7% average annual return, you could see your investment grow to $38,000 over 20 years. This doesn't include the 2.8% dividend yield that J&J currently offers. Assuming those dividends are reinvested, they could boost your returns even further. Over the years, J&J has increased its dividend every year for more than 60 years, making it a top choice for reliable income generation. The stability of the healthcare sector, combined with J&J's wide-reaching product lines, makes this stock a perfect candidate for long-term passive income and capital growth. Number 5. Procter & Gamble. Procter & Gamble's portfolio of well-known consumer brands like Pampers, Tide, Gillette, and Crest provides the company with consistent revenue, even in challenging economic conditions. The beauty of consumer staples is that people continue to buy everyday products, no matter the economic climate. Let's say you invest $10,000 in P&G with an average return of 8% per year. Over the next 20 years, your investment could grow to over $46,000. In addition, P&G's current dividend yield of around 2.4% would provide you with consistent income around $240 per year, which could be reinvested to accelerate growth. P&G has a long track record of dividend growth and increasing payouts for 65 consecutive years, which makes it a top choice for anyone looking to build reliable passive income. Why these stocks work for long-term growth? The beauty of buy and hold investing is the power of compound growth. If you buy quality stocks and let them grow over time, the returns can be staggering. Here's a breakdown of why these stocks make sense for long-term investing. Recession-proof business models. Companies like Microsoft, Apple, and J&J thrive regardless of economic downturns. This stability is crucial for long-term wealth building. Dividend growth. Stocks that consistently raise dividends like J&J and P&G provide reliable passive income. Over the decades, this income can become a significant source of cash flow. Capital appreciation potential. Even without dividends, companies like Berkshire Hathaway and Microsoft have delivered long-term capital gains, making them ideal for investors with a long horizon. Market leadership and innovation. Apple and Microsoft are at the forefront of technological innovation. As the world continues to evolve, these companies will remain leaders, ensuring their position in any future economy. These 5 stocks, Apple, Microsoft, Berkshire Hathaway, Johnson & Johnson, and Procter & Gamble, represent the gold standard of buy and hold investing. Whether you're seeking dividend income, long-term capital appreciation, or a mix of both, these companies are set up to grow your wealth for decades to come. Remember, it's not about timing the market, it's about time in the market. The longer you hold, the more these stocks can grow. Start today, let compounding work its magic, and watch your portfolio flourish over the years.